We are now going to talk about central bank digital currencies. We touched on it there. We're going to be going in depth with our panel of experts. So if you guys all want to come out. Okay, well, welcome. Why don't we get started by just introducing ourselves and tell us a little bit about how you, what you do around CBDCs. Keith, why don't you start with you?
Sure. So Keith Baer, I'm a fellow at the University of Cambridge in the Centre for Alternative Finance. We have a major research program going on with 16 public and private institutions, and a key part of that is digital money. So we're looking to understand the development of CBDCs alongside stablecoins and other forms of private money, including developing a digital money dashboard is our vision to capture some of the points we were talking about in the last session in terms of velocity, that sort of thing. Besides that, I also sit on the Bank of England CBDC Technology Forum, and I also mentor at Techstars on their Web3 accelerators.
Okay. Laura?
Hi, I'm Laura Navaratnam. So I work for Gattaca Horizons, which is a fintech consultancy based in the US and the UK, supporting a range of fintech clients on regulatory, policy and strategy matters. So a lot of that is in the digital asset space. I've been with Gattaca for about a year, and prior to that I was at the FCA for around 7.5 years, and I led their fintech practice. So that included all the externally facing functions. I developed a crypto asset policy team there as well, and our international engagement program. So if I start every sentence with from a policy perspective, you know why.
Okay. Victoria?
So I'm Victoria Thompson. I'm a consultant within the fintech practice of Ashurst Law Firm. So I spend a lot of my days working with their tier one banking clients, thinking about what the future of money is, what the future of finance is, and where that's all going. And then in my spare time, I'm actually working with a company that I've set up called Orora, where we're looking at financial inclusion and how the future of central digital banking currencies can support the unbanked and the underserved, and how that can be used by charities and social enterprise to help get people included into the financial system.
Okay, so then let's just level set for the audience here right now. And what is the state of play in for CBDCs? Maybe we can tackle UK first, and then Europe and the USA. Keith, why don't you go?
Sure. So as far as the UK is concerned, obviously I can't speak on behalf of the Bank of England, but they've been researching this subject for an awful long time. And they are now taking it even more seriously with the launch a year ago or so of the Engagement Forum and the Technology Forum to really collaborate with industry to get input from both financial institutions, technology providers, academic institutions, etc. on that topic. And the major next step, I think, is the consultation paper, which the bank expect to issue by the end of the year. And I think that process will be really important to make some of the really important policy decisions, which everybody else, I think, in some respect, is waiting to understand, so that the thinking about implementation can then start.
Right. Okay, Laura, do you want to give some background on maybe what the US is doing?
Yeah. So I definitely think the US is increasing its sort of foray into the CBDC space. So at the start of the year, President Biden's administration issued an executive order around digital assets more broadly, but that did have a very key CBDC theme within it, and that directed the Treasury to look at the future of payments in a CBDC within that context, and the Fed to continue its exploratory work and come up with a strategic plan around launching a CBDC. Last month, a lot of the reports in response to that EO were published. Now, I think some supporters wanted the work to have gone a little bit further. So the fact sheet that came out of the White House, I think some people might have wanted that to have some legislative proposals in it. It didn't, but it certainly showed that the administration is far more bullish than it had been previously around a CBDC. The whole last chapter was focused on that exclusively. It reveals that the US has policy objectives now around a CBDC, but it's more about getting the technical foundation in place. And that's where some of the projects like the Digital Dollar Project come into play. So the DDP is a not-for-profit project that looks at a retail CBDC tokenized, issued through commercial banks and regulated fintechs. and they announced at the beginning of the year a collaboration with the Deposit Trust and Clearing Corporation, which was looking at a CBDC specifically in a clearing and settlement context. Now that project has actually run a pilot. The team, I understand, are finalising the white paper, so there should be something coming out on that as well. But I think over the coming months, we'll definitely see more interest from the US, although not necessarily agreement. It would seem a lot of, particularly federal board members, seem to disagree around the usage and helpfulness of a CBDC, but I think it's an interesting space.
Okay. Okay, Victoria, do you have commentary, like more, I know you've been working with the UK, and can you comment on more on that, and then and Europe?
Yeah, I mean, I think from a UK perspective, I'm one of the original originating members of the Digital Pound Foundation, and which is kind of like the sister project to the digital dollar work. And so again, that is looking at how would you design a digital pound with the right principles and ethos to look at how you could get the best benefits for the UK from that, and what that could mean from a monetary policy perspective for the UK, which is very much following the similar path that the Digital Dollar Project has set up. But you've also got the Digital Euro Association, and they're working really closely with the central bank there to think about what the digital euro looks like. And also, you've had a real sort of growth in the regulatory space in Europe, and I think they're quite far ahead now with what they're doing with MiCA and DORMA and looking at digital assets and the regulation in this space. And it's really UK's playing a bit of a catch-up, I think, now. And even in the US, you're hearing lots of movement. So what we're hoping for in the UK, if we can get some stability, let's just see about that, then we can start to catch up to where we were. Because I think when you look back at 2015, 2016, pre-Brexit, we were really way ahead of the game with the thinking on this, the research that was being done in our academic institutions, and having the technical talent. We've definitely got that in the UK. It's just now about getting that landscape and regulatory space right for us to move forward.
Right. Well, let's dig into the whole idea of retail versus wholesale CBDC. We just had the CEO of Finality on here. They obviously have been working on a wholesale CBDC type products. It's obviously not an official CBDC, but just open up to all of you actually to, where do you think, what's going to be the most likely outcome? What's the easiest way for a government to roll this out?
To roll out retail CBDC?
Like retail versus wholesale.
I mean, the BIS surveys, which come out very regularly in terms of CBDC deployment, they say that something like 35% of all central banks are working on retail CBDCs and 65% or so working on both. So there is an awful lot of activity going on at the moment on both fronts. In some respects, I remember hearing one of the members of the ECB talking about wholesale CBDC as business as usual to some extent. It doesn't have the same complexity of policy decisions and adoption and everything else that retail CBDC has. And obviously we've had the pilots such as Bank of Thailand in Phnom and Hong Kong, the Lion Rock project, demonstrating how wholesale CBDCs can work and how they can interoperate in that case as well. And as for retail, obviously we have examples in Nigeria, Bahamas, the pilot in China, which are also illustrating how this could work in a retail CBDC context. But there are an awful lot of big decisions that need to be made, I think, for retail CBDC to ensure that the right level of adoption is there. It's great enough to justify the project in the first place, but it's not too little, or it's not too great to be able to endanger the role of commercial banks and disintermediate them and the impact that has on their balance sheets.
So, what can we learn, or can we learn anything from the Bahamas, Nigeria, China? Are there lessons? Since they have some projects out in the wild, what can we learn?
I mean, I think we can learn a great deal, both from those production examples such as Bahamas and Nigeria, and in particular the kind of questions of adoption. And in particular for China, the electronic yuan, I think the way that's being implemented, where you can take a wallet up to $1,400 or so, I think, without having any bank account, you just do it using your mobile phone number. providing reasonable levels of privacy in the Chinese context, but then going through 3 other higher levels of KYC and authorization, the most stringent of which means you have to go into your bank branch and test your identity, etc. But the higher you go up through those layers of KYC, the greater the holdings you can have and the greater the level of transactions you can perform, etc. So that's quite a sophisticated way in terms of how it could be implemented. And I think whilst it's still a pilot, the way that's happening with something like 260 million wallets now open, something like $13.8 billion of transactions now happened. It's such a huge scale. There's an awful lot of learning to come in terms of the big questions of implementation and adoption.
And to build on Keith's point, I think looking at this through a financial inclusion lens, and what the PBOC has done has been very interesting, but trying to obfuscate this need for a bank account to really open up the financial inclusion elements here. So you mentioned Nigeria. Now the ENARA, the first set of pilots, you did require a bank verification number, but their more recent pilots, they're looking at just having their individual reference number, like a sort of national insurance number, so you don't actually need the bank account. And that's a huge problem in Nigeria at the moment. I think at the end of 2020, 34% of the adult population didn't have a bank account. And they really want to use the CBDC to drive forward financial inclusion in the country. So, and obviously, as Keith says, that spectrum will become challenging in terms of how you deal with AML and KYC matters. But it is interesting to see these countries that are starting to find different ways of doing it.
Right.
But I think what you learn in the emerging markets where these pilots and experiments are placed is actually the harder issues are to deal with the infrastructure. It's the availability of the telco sector, it's the availability of the cloud distribution and networks, and those barriers which are preventing these types of services growing there. There's a layer of infrastructure that needs to be in place for you to fundamentally get into a digital money space, and how you build that, whereas you don't have necessarily those challenges in the UK. It's a different, so I think it's a lot easier to look at wholesale CBDCs where you're dealing with banks, you're dealing with people moving money from one institution to another, and or people that are in that institutional space and are used to that. It's an easier sell, whereas with retail, you're really looking at actually how do we do this in spaces where there are barriers to that inclusion, and how do you get over those barriers and have digital skills, digital inclusion, because that is just as important to be able to get to a place where you're fundamentally replacing pounds or dollars or coins or notes. You need to make that leap with CBDCs when it's in the retail space, which is quite hard in itself without thinking about the technology.
Right. So what about stable coins? Because I think we need to talk about stable coins a little bit here, because it seems like the US, there's some movement around regulatory interest in having banks issue stable coins. If a bank does that, why do we need a CBDC?
Well, a stablecoin in the context you're talking about is just a different form of commercial bank money, and CBDC is central bank money. So there is an element of dependency on a private counterparty as opposed to on the central bank itself. So there are kind of fundamental differences in that respect, and from the central bank's point of view, that's really important. And we should also bear in mind if we're talking about bank-issued stablecoins, clearly there's bank-issued stablecoins, but there are also tokenized bank deposits.
Right.
So the JP Morgan coin, for example, isn't a stablecoin, it's a tokenized bank account, deposit account, which basically means it's still reflecting the fractional reserve model in terms of that is representing, as opposed to a fully backed stablecoin, which we have with the likes of USDC, etc. So there's these two types of animals at the moment. Silvergate, I think, was touched on earlier, and they plan, I think, a stablecoin based on the meta assets they've acquired. So I think we're going to see a number of different models, more models out in the wild, following on from JP Morgan, what USDF, the consortium of banks in the US, are doing, exactly what Silvergate and others come up with, and I think it'll be fascinating to see how they develop in their own right, together with the increasing momentum behind the central bank digital currency environment as well.
So how could they interact, do you think? What would be, if you have a bank-issued stablecoin, which you said is issued by a commercial bank, and you've got a central bank-issued digital currency, how would they interplay particularly in a retail environment, do you think?
I mean, sorry to jump in again.
Yeah, that's all right.
I think there's a whole world of possibilities as far as that's concerned. One of the great things about CBDCs, retail CBDCs, is the platform they provide for innovation.
Right.
So I was in the fortunate position of being a judge at a hackathon that Barclays ran on CBDCs a couple of weeks ago. And one of the more demanding exercises that the teams were asked to go through was using the programmability of CBDC to do things like, based on certain rules and events, to be able to move assets CBDC from a CBDC wallet over to a commercial bank account wallet as well. So how you transfer one to the other, how you load up a CBDC wallet, what you choose to pay with one wallet over a different type of wallet. So there's a whole set of potential interesting innovation that can come about to facilitate consumer choice in this new world, I think, which will provide a lot more innovative options for how money is used for payments and many other use cases.
Yeah, I think that's one of the most interesting potential areas in all of finance right now. The idea of programmable money. We've had dumb money or unprogrammable money for centuries, and I don't think we've even scratched the surface of of programmable money. I mean, I'd love to hear from others. I mean, what are some of the how do we think about, how should we think about programmable money? What are the possibilities here? One of you guys want to?
Well, I think you can start to think about how you can use technology they talk about locks that you can create with programmable money. So you almost can set timers on it and conditions around when the interaction with the smart contracts, how you can release that money, what you can do with it, where it can go, and you can create rules around what money can do and where it goes and how it's used. So if you think about equities in the future, the instruments that you would have around that, around release of shares, payments of dividends, all those things, you can create that with time locks, with the power of the smart contract and how that would talk through APIs to the money. So if this happens, that happens, and then you can create all of those flows. So you can have automatic triage of the flow of finance on events. And when you think about that in a future world where you have the convergence with IoT, you have the convergence with real-world assets and digital assets, that can produce a really powerful world. That's what programmable money enables.
I think another example for parents is being able to stop your kids using their CBDC wallet for tobacco or alcohol or whatever it might be. Now that kind of touches on some of the privacy aspects around CBDC, of course. But that's my point, really. There's a whole range of potential things that you can do.
I think for central banks, they don't really care about that. They just want to create the platform architecture. Right. And that would then allow, at an application layer, for that innovation to happen. So what you're seeing now with all of the experiments with the central banks is they are thinking about what is that infrastructure and platform layer? How am I managing the ledger for these different types of opportunities to then allow, at the application layer, the innovation to exactly think about those things? Is it about how money is used, where it is going, all those types of things, or is it actually about how you structure a product, how you get the compliance around a product, all those types of things is all opportunity because you've coded it. It's more intelligent now, and that's the nature of what you get with digital money. You can start to think about it on a different level.
Yeah, I think I read something about in China where they gave away money that had an expiration date. Yeah. So you had to actually spend it. There's a way to stimulate spending in the economy. Say, here's $1,000, you got 30 days to spend it.
So with the work that we're doing with Orora, that's exactly what we're doing in the charitable sector. So thinking about programmable money, this is money that is here to deal with specific issues of poverty and inclusion. Think about food banks of the future. Actually, there's no need to make people get on a bus, spend more money to go and get the things that you've left behind. You can actually create money when you go shopping to then make sure that people can then go and buy the things that they need in the supermarket. You don't need to then pull the thing off the shelf, put it in the basket, and then that trundle off to the food bank. You can just actually create money that then is match funded and goes out to the people who really need it and is intelligent because it's been identified. It preloads those wallets and they can go and buy the things they need.
Right.
That's what you can do with intelligent money, and that can all be on an app on your phone, so you don't have the shame of going to a food bank. That's the opportunity.
Yeah, it's a very exciting potential we have here. Let's go back to banks and traditional finance. How do we set up banks and or any traditional financial institution for that matter to really to cope with this change?
Well, I will say that, unsurprisingly, regulation does have a big part to play here. And thinking about the roadmap going forward. I personally don't believe that regulation should just sit back and wait to see what happens, and I don't think having a regulatory roadmap is going to inhibit innovation if it's done correctly. But I think we need to sort of bridge the gap between traditional finance and decentralized finance. And that doesn't mean constantly just tweaking what we have and hoping that we can change the e-money rules to apply to banks or make fintechs become banks to do this. I think regulation needs to be more thoughtful and more forward-leaning from that perspective. And I say that understanding just how hard that is, and that no country is nailing this, but I think that's the space we need to get into from a regulatory perspective.
Mm-hmm. Okay, so then I'm curious about, if we have a retail CBDC, where does that leave the bank account as far as having, particularly you said there's some, I think was it Nigeria that's thinking about setting up without needing a bank account. How do we kind of deal with this, how do we deal with with not needing a bank account to access the financial system? Because today, it feels like that is how, even with a lot of these fintechs that are kind of using their own, they mostly work with a partner bank, but how are we going to kind of manage, do you think, I'm thinking from a regulatory perspective, not needing an actual bank account?
And I think the point about not needing a bank account is more to do with financial inclusion than anything else.
Yeah, exactly.
But for those that aren't financially excluded, it just gives another option in terms of what you might want to use your CBDC for versus your regular commercial banking accounts. Mm-hmm. And that can depend on what we talked before in terms of the options and the programmability, how it can be used, the policy decisions that are being made, what the interest rate policy might be, for instance. There's a whole range of things that might drive behavior to use a CBDC versus your conventional commercial bank money accounts.
Right.
But in part, I think it depends on those kind of decisions, the innovation that comes about from it, and how that plays out in the future.
Mm-hmm.
But it also links to why, you have to go back to the question, why do people have bank accounts now? Fundamentally, that's the model that's there. People have bank accounts, so people deposit money in it. The bank then uses that deposit to then lend and then to do things with that money. And that's how the whole model is developed. Whereas actually, if you are a person who doesn't fundamentally have the same needs, you're not going to go to a bank where you're not going to have a mortgage, you're not going to have these lending and those things, it's probably not appropriate for you to have a traditional bank account, and you may not even need it, and a wallet will suffice for what you need to do. But then there will always be a segment where actually you do want the products that come from a bank, or maybe with product innovation you would have different ways of funding that need. How you might think about mortgages and lending in a DeFi world when that is more acceptable is very different. So I think you can unpull the product space that is of a traditional bank right now and really think about that differently. And that's what's interesting, is to take it back to why we're all here in Web3, and how that then looks at that space and what the models are there. What a bank is in that space could be very different. And I think that's what's really interesting. If you layer in programmable money and what the potential of that is in a Web3 lens, that's really interesting, and how you can start to pull on the thread of what traditional banking is and the products and segments that they have, both in a corporate and a retail space. And that really allows you to then reimagine things. And that's what this is about. I think we are now allowing us, with the technology as a point of scale, that you can really pull apart those product segments. And I think that's what we've heard about all from the speakers today.
Right.
You've got lots of people pulling on those threads to think about, well, actually, if we're going to do lending, if we're going to do these things that banks have traditionally done in this model with these new technologies, how can we do that differently? And that's what's really interesting about when you think about the payment rails, you think about the transfer of value in that new space, what does that need to look like?
Right. Okay, I want to go to the audience because we've got a lot of questions coming in here, as I suspected we might. Okay, first one, isn't the risk that governments become totalitarian in the controls on CBDCs? They can stop the hoarding of wealth through timeout limits. It's scary. Well, obviously there are negatives. This is obviously going to be created in the context of government rules, right? Who wants to comment on that?
I mean, those risks certainly exist, and I think if we talked about the UK and Europe, EU a little earlier, they're both going through, or have gone, in the case of the EU, through a major consultation exercise, and obviously this whole question about privacy and to what extent the central bank has those powers is one of the biggest topics that's been raised, and that is undoubtedly, I'm sure, going to get reflected in the policy decisions around implementation and the way the technology is implemented. And it's very unlikely, I think, that a central bank would want, in the Western economies, to have more insight into transaction activity or controls than they currently do through the existing central bank fiat money and commercial bank money environments.
Well, I've heard even China are saying that they don't necessarily want to have controls over the central bank digital currency. I mean, who knows what actually happens when it's out? But I've heard that they want to keep it. They want to keep at least some level of privacy. So,
I also think we're going to, the retail CBDCs and commercial bank stablecoins are going to coexist for a while, and certainly the commercial bank stablecoins will probably fill the demand whilst the retail CBDCs catch up. So, from a user perspective, whilst we talk about the difference a lot and it's important, from a user perspective, do you always see those nuances? To Victoria's point, you're thinking about what the offering is and what you need as a user, rather than the technical provisions or the safety or whatever it might be. So actually, people might be going more towards the commercial bank stablecoin, and you're just placing that control, I guess, in the hands of another entity.
Yeah. I mean, we have commercial bank money now. When everybody has a debit card, credit card, all of these things, they're all based off of commercial bank money and ledgers. We just don't think about it. We just go and use it, and that's how it is. And I think that's where this all needs to evolve to, especially in that retail space. That's what we're all aiming towards, that nobody actually really thinks about it or cares about it. You just trust it.
Yeah, well, that's the thing. The technology is here today to do some of these things. Like, I know I have, my kids have a debit card, and we can decide exactly where they want to spend that. That technology exists in a way today. Anyway, let's move on. What are the monetary policy implications, and how will the mechanisms differ from the central bank's perspective? It's a big question. Anyone want to take it?
First shot. Have a second shot. I mean, to my mind, obviously CBDC is just a digital form of physical cash in that sense,
right.
A form of central bank money alongside physical cash and the deposits that are held at the central bank by the commercial banks. So in some respects, it just gives another set of levers to implement monetary policy in terms of supply, in terms of interest rate, etc. So it gives more flexibility to manage both the digital and the physical forms of central bank money that are in the broader population and broader commerce, and the ability, therefore, for the central bank to stay connected to that broader kind of community, which is a real challenge at the moment now that physical cash usage has declined from 65% of payments 20 years ago down to 17% in the UK, I think, following COVID. So the central bank obviously can be worried about losing touch, losing connectivity with what's going on in the broader economy, and having a digital form of central bank money enables that connectivity to be maintained and expanded, and therefore give more flexibility in terms of implementation of monetary policy.
That's really a good point, because if you look at it from that lens, there's a real, almost a policy imperative to have something other than cash. If cash is only 17%, you'd want to, it almost makes it a no-brainer in a way. Yeah. Okay, moving along. At the end of the road, what is going to happen between CBDCs, the CBDCs and stable coins like USDC, USDT, BUSD? The government can create rules to ban other stable coins, right? So what is going to happen between CBDCs and stablecoins?
Well, I mean, the governments can create rules to ban them eventually, but it doesn't necessarily mean that they will. I mean, we've talked about that they can perform quite different functions within the market, and I think you're already starting to see different countries looking at this in different ways. It would appear Europe is taking a particular stance. I think the latest text of MICA suggests that there's going to be a cap on dollar-denominated stablecoins, but I think that's not the only approach that's being looked at. So again, it's going to depend on how these products evolve and what's going to. But I don't think it's going to be a simple case of, well, we've got a retail CBDC now, we can just get rid of everything else.
Right. The other variable is regulation. Obviously, we're going to see more regulation around stablecoins. Same process, same risk, same regulation kind of thinking, and obviously FSB, FATF, and so on is all driving towards that kind of direction. So that's one of the other variables I think that will happen, and that will, some stablecoins, such as the ones listed there, may be in a better position than others to be able to comply with those regulations.
But I think it's important to say there is a spectrum when it comes to stable coins, because we keep using that phrase, but I think as we've seen over the last 12 months, not all stable coins are created equal, and therefore some have had issues. Let's just leave it there about how that has quickly unraveled, because actually the algorithmic stable coins, those types of things, there really hasn't been any backbone or core to them. So from a regulatory approach, they're going to then look at actually how you create that segmentation of the market for stable coins and how that works, how they will be treated differently. And I think you'll see more and more of that sort of evolution happening. So then how does that then communicate it out, whether you're a consumer or you're a sophisticated investor? What are you doing with those coins? Because I think it all comes down to what is the product? What is the thing that's behind it? If this is just the flow and the stable coin is merely the flow of what that value is and where it's going, and you're using that technology to enable that flow to happen in a faster, quicker, cheaper way because that's easier, or are you actually fundamentally doing something different with that stable coin because there's a product or an element attached to it that's different? Because that's what's really important for the regulators to think about, that exposure to the market and what risk that creates in the market. Because that's what we've seen fundamentally in this space. Because it's been left unregulated and we haven't had people in that space, we've had a lot of retail investors then get significant risk and exposure to things that they probably shouldn't have done if the market had been more likely to step in. And I think you're going to see, therefore, a bit of a sifting out in that space around what is suitable for people and the classic regulatory segments coming in from retail investors to corporate sophisticated investors and those types of things.
Okay, that actually segues a little bit into the next question here. As payments are already largely digital and we have faster payment systems in the UK and Europe, what are the key benefits to consumers for a CBDC?
Yes, so just kick off that part of the answer. I think in part it depends on what we talked about earlier in terms of the innovations that might sit on top of a CBDC. There's no point having an alternative form of faster payments which just mimics what's already available. So I agree with the kind of broader point there. And this kind of touches on one of the challenges I think that CBDCs have to overcome, which is it a solution looking for a problem in that context? Right. So it's a very valid question to ask. And I think it's a question of the things that you can do with a CBDC which you can't easily do with those existing rails, which is the fundamental answer. What those are, I think, really needs to come out of the kind of processes that are going on at the moment from a consultative perspective, and also from the innovative thinking from the commercial banks to understand what kind of new functions and features they can implement on top of the CBDC, which really differentiates against faster payments, for instance.
Right.
But faster payments is expensive. It's hard and it's complex. It's not cheap to get into the faster payments network. Right. And payment spaces are really complex the way they're set up right now. There is the potential with this to make that a lot simpler. If you set things up right, if you create the right platforms and the right integration, that can get a lot easier. And fundamentally, the technology with distributed ledger and how that operates, you can get a much cheaper price point. And that's an opportunity in itself in that pure infrastructure layer for payments. there is always that. And you've seen that with the evolution of payment systems always. Banks have always been looking for a better way to move money around, a cheaper way to move money around. That's how we ended up with faster payments networks. And there are equivalents of that all over the world within geographies where money needs to move quickly. What you have the opportunity with CBDCs, if you build the bridges right between the different fiats, you can make that, again, cheaper, faster, quicker. And then there's another layer on top of that, which is the innovation layer, which Keith talks about. You can do different things because fundamentally you've got digitized smart contracts that can then use that flow in a different way.
So, Keith, I want to go back to something you said when we had our call last week about this. You talked about a Kodak moment for banks, so which is a little, that is certainly a strong statement. Kodak is no longer exists in its former form anyway. What do you just elaborate on a Kodak moment for banks with CBDCs?
I should say this is a phrase that came from a bank I was talking to around IO, so I can't name them unfortunately, but it's a valid point of view. The point is, we're obviously talking about Web3 in this conference, and Web3 you can characterize it in a number of ways, but let's say it's all about replacing centralized rent takers with decentralized smart contract code and governance models implemented in tokens. So what does that mean for banks if you consider them to be centralized rent takers within the financial ecosystem? Well, one of the things it may mean that the centralized databases that they hold all their customer information, all of their product information, transaction information, all of those things become decentralized public blockchain networks at the end of the day. So it really, if you take that forward, basically you can see this major outsourcing of what a conventional internal bank IT infrastructure looks like in a fully decentralized world. Now this is kind of an extreme view, I appreciate, and we may never see that kind of extreme view happen, but we already can see some of the first steps, arguably, to that with, for example, the work that SocGen Forge and Huntington Valley Bank are doing in the DeFi space with MakerDAO, where they're taking out loans in the DAI stablecoin by using real-world assets, mortgages and tokenized bonds in the case of HVB and SocGen. And essentially that's them working in this decentralized environment for refinancing some of the financial transactions that they've done. So I think it's going to be fascinating to see, and whether that will be a question of a real Kodak moment, and those that aren't adopting and adapting will really struggle to survive in that model, or whether it will happen on a more gradual basis and everybody will just see a slower migration. I think the jury's out as to how that transition might happen.
So let's go back to CBDCs. Do you all think it is inevitable? Is every country going to have a CBDC? Because right now there's like 2, maybe 3. So what are your thoughts on that?
Yeah, I think it's inevitable. It's not the pithiest panel answer, but I do think it's inevitable. What isn't inevitable is how those different CBDCs are going to manifest themselves, which is why the conversations around interoperability are so crucial. We don't know when. Obviously, if someone's asked a question about timelines, I don't think it's going to be necessarily very quick, but I do think that's where it's going.
Yeah, I think it's a matter of time, really, and it'll be interesting to see the different journeys people take and what that shows about the different cultural landscapes within how money is used within those economies. And I think the really interesting thing with CBDCs is about actually, can you be brave enough to reimagine money and to create money that has real values in it? And you think about what we need money to do to achieve the UN SDGs, to achieve net zero and the transition that we all need to keep our planet alive. Can we be smart with money? Can we reimagine money so it actually makes a real difference? And that's what you can do with programmable money.
Just a couple of additional comments. In the BIS survey, central banks regularly ask their views in terms of when they expect a CBDC to be implemented. On an average, I think there's a kind of a medium-term 3 to 5 year kind of timescale.
Right.
And that's true, I think, here in Europe as well, with the UK's statement, if the CBDC is implemented, it'll be the second half of the decade, and from an ECB point of view, around 2026 again, if the current exercises, discovery exercises are successful and the political decision is taken to implement one. So that kind of timescale, I think.
But it's like the parallels with the telco networks and how you had that interoperability with how you developed the telco networks. I think you'll see that with money. It's finally that realization of that potential, so you can then create the interoperability between those networks and how it flows around.
Right. Okay, we're going to take one more question from the audience. With programmable money, anything is possible with code. You can create any rule, and the question is, wouldn't that cause chaos? I mean, obviously there has to be rules, right, around programmable money.
I mean, that's a question that we consider. We're given on the Bank of England CBDC Technology Forum for exactly that reason. So there's questions of where that programmability actually takes place and how it's implemented and how it's controlled. So it's a very valid point, and it comes down to the technology design that needs to be implemented once all the policy decisions have been made. But very true. So first off, there'll only be regulated institutions that are in the position of being a payment interface provider, using the Bank of England's terminology, to facilitate wallets as far as CBDC is concerned. And undoubtedly there'll be controls of some sort in terms of how that programmability can be implemented. But the intention, I think, is to provide a platform for innovation and to have as much freedom within that context, but enough to avoid the risk of chaos, obviously.
Right. Okay, so I want to close, and I want to hear from each of you about what you think a CBDC is going to look like in this country. Victoria, I'm going to start with you.
I think the opportunity is to enable the 1 million people that are in the UK that are unbanked, the 13 million people that access government aid and support, to get that in a smarter way, to actually make that far cheaper for the government to manage and to distribute. I think that's the opportunity in the UK, and then I think you can take that into the wider emerging markets to really deal with the fact that we have so many people who are not in the financial system right now who can be in the system, and that's what you can really do with this technology. When that comes together with the right consortium of people to get those digital devices into people's hands, to get the digital skills and the infrastructure there to enable people to get included. That is the potential of this new world of new money that we can have. There'll be some interesting challenges along the way, but I think that's what we can really do now. We can really make sure that people are in the system and have the opportunities that have been denied for so long. And I think that's easily within reach within the next 5 to 10 years.
Okay, Laura?
Yeah, and I mean, thinking from a sort of a behavioural perspective, I think this will change everything. If every country, including the UK, has a retail CBDC and cross-border payments become truly frictionless, there's no reason why I would just hold sterling. I would have dollar accounts. I would hold yen. And you think about the economic turmoil that we're going through now. You just imagine that in 15, 20 years, when I don't rely on sterling necessarily.
Right.
Do we have a shadow economy where things are listed in different prices? Could there be some countries around the world that actually rescind their own currency for favour of a premier global currency?
Right.
Now, it sounds fanciful, and some of it, is a little bit far out.
I've heard people talk about that.
But I think those are the things that we need to start thinking about and talking about now, even if we don't know the answers, just so that, again, from a policy perspective, you're starting to shape that early on.
Keith, last word.
I think the point I make is one of the key reasons for having a CBDC is to support a digital economy. And I think this country, more than any other, is in a great position to be able to facilitate that digital economy, especially when you combine it with the strength of financial services in the UK, the strength of the fintech industry in the UK. Put that together with the broader digital economy kind of story. I think having a form of digital money that supports that is an economic necessity, personally. And I think that will have a big drive in terms of what the shape and form is going to be when we get one.
All right, well, it's going to be exciting to see. It's such a fascinating topic, and one that we will be revisiting on a regular basis. So, Victoria, Laura, Keith, thank you very much. I think it was a great session. Give them a hand. Okay.